Hi, everybody. This is Phillip Guan, CPA. Welcome to the last training section, class 13 for these cycles. So today we are going to train S corporation, S like Sam. This is a very common way of do business. This is the legal smartest way to do business. If your business is qualified for S corporation and you do S corporation, you will save taxes. And I'm going to get into the training, and then I'm going to explain it to you why save taxes and why there's a lot of people use S corporations. So I'm going to share my screen. Victoria, would you be able to see my screen?
Yes.
Big enough?
Mm-hmm.
Okay, good. So please help me to read this.
In this scenario, you will practice entering the following: shareholders' information, income and deductions, balance sheets, depreciable assets.
Okay, and then Victoria, we're going to continue a little bit. Continue. Okay, continue this. Right here.
Scenario information. The Sunshine S Corp is a corporation that was incorporated in January 1st, 2012 in Florida. It was granted S corporation status at the start of business. Therefore, there are no E&P issues. Sunshine S Corp owns and operates a grocery store in North Miami Beach. The S-Corp files return using a calendar year and uses the cash method of accounting and is not a specific service trade of business, SSTB.
Thank you, Victoria. It's CAT math. CAT. So now we have been using accrual basis, accrual math of accounting for many of the practice questions. But in the real world, most of small business use CAT math. What's CAT math? It's simple, as the name say. When you do business and receive the money on your hand. For example, today is 12/20/2023. You provide service and you also receive the money from the client that consider a 2023 tax return, the revenue. But if you happen to January 15 of 2024 to receive the revenue, to receive that check, there will be 2024 tax year, which is going to file tax return in early of 2025. All right. So those are the basic information. I'm going to move this one to the far right tab and split the screen. And I'm going to share this one. I already did this tax return last week as well. Last Friday, I did 3 of them after the training. So I'm going to open it. Okay. As you can see, tab number 1 under general, and there are many tabs in here. Number 1. So we can move this one in here. Oh, that's quite a bit. Good. So now, the EIN number, as well as the company's name and do business as. Now, you set up a corporation in Secretary of State. You apply EIN number from IRS. You apply your do business as in your county. And you apply your business license in the city. That's 4 different levels of the government. Is the address. And then as Victoria just read it, it say this company was started in January 1st of 2012. Right here. They are very smart. They start as the corporation and also select it as an S corporation. This is incorporated. Incorporated, which means that this corporation was set it up on this day. And then they also, so this day was there's a state of Florida approved them. And this is the day after approved, you apply for EA number first, and then fill out 2553 form, and this one, 2554 form, this one, and then apply for S corporation. IRS going to send you S corporation acceptance letter, and you need to keep that as a record. In case you lost it, you can request the IRS to mail you another copy. So in here, there's talking about, say, at the very beginning, so there was not E&P issue, which means if you used to be a C corporation and change it to S corporation somewhere, and then you will have portion of the earning, return earning before S corporation, and they need to be, there's a rule of distribution. If you keep too much money in the C corporation over the need of the operation needed, you get penalized. Because C corporation, besides the W2 have it, so the owner, which is shareholder, get the money as far as in the dividend, and it's also taxed in the individual. So it's taxed twice. One in the corporation, 21% for federal, state of California, or state whatever you are, depends. Okay, so state of California is 8.84, so it's almost 30%. And then the same amount of money, if they clear dividend, they also need to pay dividend income tax. So therefore, it's called double taxation. C like cat, the one 2 days ago we talked. So now today, S corporation, here's the coolest thing about S corporation. S corporation need to file tax return. S corporation to the IRS does not need to pay a penny of income tax in the corporation level. And then all the income and losses will be flow through as a K1. And that's a pretty cool deal. Now look at this. This is all basic information. There are two shareholders. Now, S corporation is okay to have one shareholder. Let me see, is it one? Because I haven't did it for oh, there are two shareholders. One is the state, and the other one is an individual. Okay, there are two shareholders. Okay, this is first shareholder, and the second shareholder is not an individual, it's an estate. You file tax return for estate for 1041. Estate is somebody when they pass away, when they keep that under the estate in their social. When you're alive, you can have a social. We talk that later, okay? So this is the first one, and we go down obvious. It's a cash basis. As you can see, I make a mistake last time. Everybody can make mistake, include Phillip Guan CPA. So everybody need to double check it. Now, this is the last year income, and then also pay payroll to other employee, not this. Oh, S corporation must pay reasonable compensation to the shareholder. Okay, who are individuals, not the state. Okay, Now, the flip side, like yesterday, the partnership, you cannot pay the W-2 to the general partner. For C corporation, the law does not require pay a reasonable amount of compensation to the C corporation shareholder. But the C corporation is subject to double tax. If you pay W-2, they will be less in subject to double taxes. So we're good in here. And let's do first thing first. The income. Oh, the shareholder. The shareholder was here. The first shareholder is an individual. It's the social. The first last name, their address is a director, and you sign the tax return. You get 100 share, not 100% share, 100 share. So they have total of 200 share. So this person have 100 share, and the other person have, so there's 50%, 50%. 50% of the ownership, 50% of ownership, 100 share. It's not 100% share, okay? 100% of the time to spend on it. So you only pay compensation to the, but even you input in here, you have to go back to input in the deduction. Here is the second shareholder. It's not an individual, so therefore you have to choose estate or whatever apply for. If they are individual, you don't need to choose anything in here. Okay, so there's nothing in the first because it's not a person, it's an estate. Okay, the estate have EIA number, and this is the EIA number of the estate. The person, when they pass away, you no longer can use the social, but you can create an estate to continue to carry over the legacy. They have a title, the estate to do a treasure. Okay. See, they also have 100 shares. It's also 50%, 50%. Okay. Same thing. They do not pay as a W-2. It's not an individual. Yeah, please mute. Yeah, please mute the recording. We're in recording. Please mute it. Thank you. We need to upload it to the, oh, I already learned it. So now, the shareholder, we are okay. And then there's a few questions we need to answer on here. And it be not necessarily always no. It happened to be no in this example. Okay. And you probably ask what? Why yes, why no? And that can take some time for me to explain it to you. Okay. So you're good in here. Now, and then we go to income. Now, there is a portion they talk about the incomes. Right here. Okay, there's a portion talk about the incomes. No, this is the income. Now, the first one is gross revenue, right here. The second one is return and allowance plus any cashback. So now it's a minus. Inside the tax return, 1A minus 1B. However, you do not need to put a negative sign in front of it. The software will minus by itself. If you put a minus sign in there, it's wrong. And then there's an interest income, 4,000. In the real business, most part of it is not an even number, but this, for example. So when you see things in the even number, you see whether or not the client may not necessarily provide you a right number. But sometimes do. Sometimes, for example, you open a bank, new bank, some bank, they give you like 1,000 or 500, something like that. And those are, they are issue you 1099 INT. State refund, if they are cash basis. If they're cash basis for state refund, you need to include as an income. If they're accrued basis, you don't have to. Okay. The reason is you have included this amount in the last year tax deduction. You take more tax deduction on as a state tax in the previous year in 2022. So therefore, the refund for not individual, but the refund of the S corporation state refund, California, let's say state of California or whatever state you have. The further refund, well, further, first of all, the further normally doesn't have income tax. The further for 1120S for IRS, you get penalized if you file tax return late. It's quite expensive. It's per shareholder per month, 250 per month per shareholder. There's a lot of money. That's a maximum cap. And you also, there's a law, could be waiver, request for waiver, okay? But you have to pay first and then request for waiver. If you don't pay it, you're not qualified for request for waiver. And I'll go back here. Today is the last classes for this section. So I add on a little bit more for you. So now, those are all expenses. They're all from A to E. So in here, expenses is called deduction, the same thing. As you can see, they're from left to right, from A to E, it's just input it. So now, as you can see, advertising, there are more than one. You double click, you see it's all here. You do not edit by yourself, just do it like this. Let the system edit. And when somebody check your work, it's easy. They don't have to punch the 10 key. And then the system also generate overflow statement. So all the number is inputted in here, right? Now, independent contractor need a 1099 issue. When you pay independent contractor is $600 or more in a year to a person, you need to issue a 1099. This is all kind of insurance. Now, the officer compensation pay to themselves. Remember, in this example in here, they don't list it anymore. They just say it up there. They say they pay for that shareholder. It was right here. You see it? Right here. So you have to be read it very careful. And also in the real practice, they gave you the W-2 of the office and also the W-3 in total for the whole company. So what you need to do in line A is, in the real practice, it doesn't work this way. The real practice work this way. you have a W3. Well, I'm going to calculate W3 for you. So to see how much. Here is the sorry. Pays. So this is paid to employee and this is paid to the boss, shareholder. So this is the total. 84K is the total W2 to anybody, include the employee, into the shareholder. So you will 84K. Okay, put it 84K. So in a real practice like this is W. The total of all W2 is called W3. Max 1 total. Okay. Yes. And then you minus officer compensation. This. And then this will be a subtract number. You know, like this. 29,000 in there. And you do this math and it show up in here. That's how you normally figure out their numbers. The client will provide you a W3 as well as all W2s. They also identify who is who. So all others are straightforward. Now, if you have anything other than the listing thing, we are in here. Double click in here. The training, I don't know, they happen to put in the same amount in the example. It's not the mistake, okay? It's like here. Like here. You see it? There are two kinds of it. The one is training as 1475. But when you see the client gave you exactly the same number, you should go back to ask, hey, is it this correct? I saw that happened to be the same. And sometimes they make mistake. Now, we know in legal and professional, we have an item. Normally, in my practice, I don't want to be put other legal and professional fee on top of that or professional legal and professional fee. I normally like to put this one back to add on the legal and professional fee. But in this example, want us to do it like this, okay? But more likely it's like this. Let's say it is not legal and professional fee. Let's say this is something other thing not on the list, not on this A to Z list. And sometimes the list in here that could be up to 20, 30, even 40 to 50 items other than that. Depends on how you go detail of the things. But it's better for you to classify back to what is the IRS list the things as much as you could. It's better. And then if you listed the other expenses too big, they will be kind of like not as good as or put it all different other places supposed to. Okay. And then what else we have? They have a balance sheet. There's a beginning and ending as well. Okay. It's just pretty simple. The example say is cash basis when you have that and not supposed to be payable and receivable in here. But the example say it there is a payable and receivable, and we just put it in. Okay. And there's a tax exempt security, account payable, capital stock, return earning. That's the beginning for the left side. And on the right side is the ending. What else we have? Distribution. How much they distribute? They distribute 2 times. Master distribute total of 53,050K. And March 6, they distribute the total of 100K among 2 of them. The distribution by itself not necessarily taxable, but what is taxed is the flow through income and expenses, which is going to show in the K1. But it changed the basis. But if the distribution over the basis, that will be taxable. And you say, why is that? Maybe a little bit too technical for you. So don't worry. And this is just the beginning of the S corporation. There are a lot more. When I go to master tax program, we study, it is in 1 semester. So there are a lot more to learn, but this is a good starting point. So in here, there's 2 assets. One is bought it in the 2023, 15K. We went to expenses, section 179. Expenses all in this year. And then the second one, delivered truck, we also bought in current year, 43K. So now in here, you need to choose a truck and a van in here. So based on whatever is supposed to be checked, whatever list, put in here, okay? Is the section 1245 property and over 5 years. Now, what else we got? Let's see. All the blue things have been popped. So we do one thing, other thing. This is the beginning. If you take this as a new client, you need to input this one. If this is a continuation, this one should have been low over. And sometimes the low over make a mistake, you come here to input the right one. This should be the ending balance of from the last year M2. Okay. They all match together. Okay. So now in here, last not least in here, and you put in today's day, for example. As director, right? And this is the person who signed the tax return. A1, 2, those are all makeup numbers. 828, 524, 802, 7, and 1040. So now, let me show you what it looks like. Now, this is the finished product. As you can see, I green check marks everything last Friday when I finished. When you finish the tax return, you should green check marks every single thing, every single letter and numbers. When you find something is wrong, go back to where you go back to. Yeah, yeah, this is right. This is right. So you should double check this against the original. They are from A to E. Yes. Now this is cash basis. See, I make a mistake yes last time. So this happened to be all nodes in here. Not necessarily always no. Depends on the situation. Okay, next page. It also happened to be all no in here. Section 179, like it. Solution. Balancing. Look, in here, here's the return earning. Look, this 101A67. This one's supposed to be in here. So this is wrong. And whoever did this one before, so these two numbers supposed to be matched. Okay. The beginning of return earning, 101A67. 101A67. Now, if they make mistake in the previous year, they need to do prior period adjustment. And in here, $101A67, right? $101A67, and then you have to match this. This. And then the ending here supposed to be 162,469. Supposed to be matched here. It is not matching. That means you make a mistake. So let's do the map in here. Just to figure out the difference. 162,469 minus 159,519, 2950. They over distribute that much. It's in distribution. So their distribution supposed to be like this in order to 16246A. 469 or 468? Yeah, 469. You see it? It match. The beginning of return on line 24 match the M2 line 1. And the line A match this. If you finish the test return, those number doesn't match, something's wrong in your test return. No, this is smart. They tells you. Here, come here, like here. I'll scroll down. Oh, it's not required. We done this. So we're done. Any question regarding about today's training? We just finished the whole S corporation tax return. I finished chat, as you see. Oh, you want to be agree so that they can agree. It's like here. If you don't allow it, it's kind of like fishing, right? Why are you doing it? You want to allow it. Good. Good. Distribution change a little bit. It match everything. Very good. And this is the return, the cost of goods sold. Costs. Here's the K1. When you get it, yes. So this person is it. So now, and then the other person, the other is they get this K1. They flow to the. Now, let me tell you this. Let's say this person, Sunflower, right? Copy. Is the shareholder. Oh, individual. Uh, so now I'm open the individual tax return for as a bonus I gave it to you. Okay. Okay. I'm making up. Now, this is the address. I am doing something outside of the training material. This is the shareholder individual tax return. I want to show you what it looks like. Now, you remember how much they make? This person was getting a W-2, right? Do you remember that? This person get the W-2 at 29K. So this is corporation. EI number. Let's say this is 29,000. Instrument and put in 5 grand. Set up for it. Now, so at this moment, there's only, I was not supposed to hit the calculator. I hit it anyway. So when there is only 29,000 W-2, but in fact, there is more than this income. This, you remember there's a K1? The K1, what the K1 is going to happen? As you can see, the S corporation, after you calculate all this up to line 22 and all from 23 all the way down, there's nothing. There's no tax need to pay. Is it tax-free? No, it's not tax-free. It's taxable in their individual. How to do it? Okay, Sunflower have 113K101. What's this? I'm using up here, the third K1 is more. Oh, it's not available, but in the when they're available, I hit this button, the K1 view get into there. So now let me just get this one to you in the, look, what's this? This is the EIA number. Now, under income, second tab, K1 input. Oh, they're not available to do the input in here. What it can happen? Okay, I use this example. In 2022, so this is not the real client, okay? Just Mr. A, okay? So now, in here, we're not gonna put in any other information. Let's say it was 29K, right? And then there is a K1 from here. That's conversion. in that the K1, the name of the K1, but in here, the more important thing is a 101, something like that, right? Yeah. The K. I want to show you how S corporation versus sole proprietorship, the tax, why people use an S corporation. So the K1 for sunflowers is 113101. 113101. Okay. Right? 113101. 113101. Okay. So now I just put it. It doesn't matter. It's the company's name, but the thing is, it doesn't matter in here. Okay. So now what matter is in this one, there's one more places you need to put. Otherwise, you need to pay a lot more tax. Look, let me show you it first. If you don't do anything, just like this, put the W2 and put the K1 box 1 into it. The federal tax will be like this. This, you get this, will be 24K. You get refund because you get $5,000 in here. Now, watch. Remember, this you owe 20K. In here, there's one place that you need to put it in. Right here. As corporation. First one. I was putting ABC, but I mean that's a company. This is 113101. The W2 was now this one you put in here. What can happen? So the tax was all about 20K plus, right? For federal. Before I make these changes. Once we make these changes, what's gonna happen? Do you see it? They're more than 5K less in tax. What is it? There's a called QBI. It's qualified business income deduction. 20% of that. Many people mix it. Especially when you do your own table tax or something. And many people miss it. When you input a K1, besides box 1, you must go to box 17 and then come to here and then input all the information. That will give you additional 20% of this as the deduction. So QBI. Now, remember, so now the total tax is about 14,900, right? So like about 15K. What if this person is not an S corporation? This is their net income, right? Now watch this. And this, let's say they do business together, a partnership, or If they do this business as a partnership, not as corporation, they will be in here. So what is, so in here, but that's the EIN number. That should be the same. Okay. So now this is 113-101. But in the partnership, besides here, you also need to be box 14, you must be input. That's earning, so 113. Okay. If you are doing business as a partnership instead of as corporation, just all the income expense is the same, and you file tax return in 1065, and you are going to also in here, you also need to put in here. Yeah. This also still need to put it in. Now, I need to put this to EIN consistent. Otherwise, they're not matching. Now, what can happen? You're doing exactly the same business. You're doing partnership with the other estate and make the same amount of revenue, yet your tax will be different. Guess what is the tax? Your tax is 35K. What? 35K instead of like 15K? So what's the problem? Because you need to pay subject to self-employment tax. Now do you see the tax saving? Now you know why people want to set up the business as an S corporation instead of a general partnership, or they use an LLC and elect it as an S corporation. Or some people say, why don't I just do business in sole proprietorship? So property is still subject to self-employment tax. Very similar as partnership. You pay exactly the same thing as your partnership in here. So, any questions? No question? You see this? That's a huge tax saving. Okay. Let me conclude today's training, and then I can stop the recording first. Stop.